Everybody talks about how hard it is to find a good deal. What people don't talk about is that deals are made, they're not found.
I love this conversation, by the way. We talk about this in our Elite Mastermind all the time because I think folks coming into real estate just expect, like, once you get tapped into the right underworld or the right brokers or the right sellers or whatever, you're just going to have all these this deal flow, and a deal hits your desk and it's like this obvious thing, like, oh, that's just a great deal. I would say 99.9% of the time we look at a deal, immediately we're like, we just don't know. It's hard to tell. In other words, you've got to dig into the deal, all of the fundamentals, all the variables. I was just talking to one of our mastermind members the other day, and I was like, look, you're looking at these deals in 2D and not 3D. 3D meaning you're looking at all variables. You're looking at rents, you're looking at debt, you're looking at expenses, you're looking at opportunities to add revenue. I don't know why you guys are laughing right now. It doesn't make any sense.
Well, I mean, looking at a property in 3D compared to 2D is wild.
Well, it's
your analogy is dumb, bitch. I don't even understand what you're talking about. What are you even talking about?
It's a crazy take. I know what you're getting at. I mean, look, I think new investors, even experienced investors, it's like they're like, man, I can't find a deal. And it's like, do you think someone's just gonna like slap you across the face and like put this deal on your desk and you're like, oh wow, I found a deal? Like deals are not found. They really are made. And that some of that is experience, some of that's getting around the right people. And I've had good deals come across my desk, but to turn a good deal into a great deal or an okay deal into a good or great deal, it takes some strategy, it takes some creativity, it takes some problem solving. And sometimes it's simple. I mean, I looked at a property once where they accidentally put in taxes twice and insurance twice. And so the expenses were really high. So that's like a very, very small example where at surface level, it actually looked like an okay deal. And a quick glance at the financials, I was like, you know what? These expenses seem high, and they were high. So that's like at face value, it looked like almost not a deal or maybe an okay deal. But realizing that they put in the wrong expenses and you pull those out, you're like, wow, they doubled the insurance, they doubled the taxes accidentally in that expense line. That's where all of a sudden, okay, now I can make a deal. Like I can make this a good deal, where a lot of people looked at face value and they just passed on the deal because they're like, oh, the numbers suck. The price doesn't reflect the financials. And there's so many examples of that. But deals are rarely ever found. They're almost always made.
Well, I think it comes down to a mindset thing too. We talk about mindset all the time with our elites in the mastermind. I mean, I don't know how many examples we have. I have one off the top of my head I can list where we were going through deals, and this guy, one of our elite mastermind members, was kind of pissed, and he was irritated, and he goes, this is bullshit. I cannot find deals. Everything I look at's overpriced. And I'm like, okay, well, yeah. Tell me where you're finding these deals. He's like, I go on Crexy, I look at the pro forma, cash on cash is low. They're asking several $100,000 more than it's worth, and so I pass and I pass and I pass. And now that person I think he's about ready to buy his third mobile home park, or second or third. And he sort of broke through that mindset barrier of, oh, okay. Like to your point, Gabe, like, oh, these expense ratios seem high, or why is revenue so low, or what's happening? And you have to dig in. And I would say it's more than just 3D, Mitch. Your very myopic, tiny little brain. I think there's a lot of more variables than just three. There's debt.
Oh,
there's
is
price,
that how you took?
there's
Is
terms.
that how you took that? Okay.
Yeah, there's seller financing. There's going hard money. I mean, there's a deal that you and I looked at an RV park in Central Oregon, and we went down. We counted the number of RVs traveling the highway. We did all this stuff, and we passed on it. I don't know why we passed on it. We should probably dig into that. I think it might have been because we were looking at it very linear. Like, this is the debt we know we can get on it. It's
Oh, is this the RV park that I bought?
Yes, it is, Gabe. Yeah, that was a layup for you, buddy. There you go. And then comes in Gabe the Savior.
This is before I knew you guys. I was just getting to know you, and I mean, there's over $1 million. I'm about to refi this thing. There's over $1 million of equity.
Mitch, can you mute Gabe's mic? I don't want to hear it. I don't want to hear it. No, that's a great example.
I love it. I mean, it didn't meet our criteria for certain reasons, but it met Gabe's, and that's fine. And Gabe saw a deal there. I'm glad he's going to get a big win.
I did not find a deal. I created a deal.
Yeah, and I love that. I think it's great. I think it's all about, though, taking some time and understanding, like, so many people do not understand the P&L, the profit loss, don't understand the rent roll, can't understand how to look at an area. We bought a mobile home park down the road from us, 20 minutes away, that did amazing. It was one of our best exits that we've ever had. And it was like listed on the MLS. Nobody else was really going after it. I think by the time I actually made an offer, there was a couple other offers, but like people couldn't really understand what that thing was worth. And to be honest, when we first looked at it, I didn't understand it either. I was like, gosh, maybe this is a good deal.
Oh, I did.
Maybe it's not. You didn't. You were very confused.
It
You
was
were
my
lost in
idea.
the
I'm the one
sauce.
that found it.
Travis
I
called me
should have taken
mumbling
it.
and confused, and I had to put him in the right direction. But the point is, like, we were able to do a market study. And this was early in our investing career. This was our second park, so we were kind of green. But we did a market study. We looked around at other comps, at 2-bedroom rent. We looked at vacancy rates. We know the area because we live here, and we're like, okay, we think that even though we're basically buying this at value, we think there's a lot of upside because we think there's a lot of upside in rents. Now, our assumptions were right, very right, and we were able to do really well as improve the park.
And we got seller financing too, which is creative terms that made it work a lot better with 10% down.
And by the way, he came down $300,000 because he wanted to close really fast. And we're like, let's do it. We'll close really fast. There's so many lessons from that deal. We also raised capital. And so we went in with very little money, and we were able to create an amazing deal where other people just couldn't see that. We did the same thing in our town with an RV park, a short-term RV park. In fact, it was listed on RV Park Store, and it was just sitting there. And we're like, dude, let's dig into the numbers. There's no dynamic pricing.
When I went and
There's a
sat in that guy's
statement.
office too, remember that? I sat in the office, just listened to him answering, "We're full, we're full, we're full, we're full." I'm like,
Yeah, Travis is in the office, and he's like, I'm on the phone with him, and I'm like, Travis, ask him who's calling, because Travis couldn't understand, what to look at or what variables to look at. He was very confused person overall. Anyway, I told Travis, what is he saying on the phone? He kept saying, "Yeah, we're full, we're full, we're full." I'm like, well, is that not a sign that there's a lot of demand for this? So anyway, we're able
and
to
the
make a
prices
good
were
deal out of
too
that
low.
as well.
He
Yeah,
was charging
exactly. It's
$60 a night year round.
In real estate, there are so many levers to pull. And I think people sometimes look at this very singularly. Like, if you take the average property in any asset class, in any part of the country, you take the average property that's listed and you go get average traditional financing on it, and there's no level of creativity, no level of negotiating, the average property doesn't pencil out as some great investment. You're putting a lot of money down, you're not cash flowing very much, your cash on cash return is low. And people forget, like, within real estate, there's so many levers to pull, whether that be the financing, whether that be the price. I mean, there was a period of time where I was buying bank-owned properties at 50 cents on the dollar oftentimes. And it's like I had this belief in my mind, and not even a belief. I just decided, like, I didn't care about list price. It had to meet my criteria. And at that period of time, there was a lot of properties on the bank's books. And I said to myself, I actually don't care what it's listed at. What am I actually willing to pay for it? So I've seen people many times, they go, well, they want this much for that property. And I'm asking you, well, why do you care what they want for the property? It either works for you at that price or it works for you at a different price. At least offer the other price. Like, what's the worst case scenario? They're gonna say no. They're gonna laugh at you. I mean, I had a lot of sellers, agents laugh at offers I wrote back in the day, but I also bought properties many times 50 cents to ask price, 70% of list price, right? And so, price is just one lever to pull, but just because somebody lists that price doesn't mean that's what you need to pay for it. And just because they want that price doesn't mean you can't negotiate seller financing or some other creative type of to financing outside of traditional financing where the numbers don't often work. There's a lot of levers to pull.
If you like what you're hearing on this podcast and want to come and hang out with us as well as other members who are scaling in cash flow real estate, you've got to check out our elite mastermind. Inside, we've got investors who own hundreds of millions of dollars in real estate and are doing amazing things. We'd love for you to come join us. Click the link below.
Mitch, we made an offer on that car wash. And what did the seller call us? We were frauds because we were like zero down, owner financing.
Call me a fraud. I mean, we went in really, really strong with like zero down, seller financing, like all these things that were very much in our favor. And which is like, it would have worked great for us, by the way. That would have been a great deal. But we went in too fast, too hard, too aggressive in the beginning. I've learned a lot since then. I mean, Gabe, you just talked about the price being like this fixed thing, which is not. It's not a fixed thing. Like, come up with your own price, which is really great. Also, terms though, we've gone into 2 deals in this last year and a half or so, where the seller's like, no, we're going to do bank debt. We go into the deal, and we start looking at the deal, and we work this deal as best we can, and we're like, bank debt's not going to work. So then 2 weeks, 3 weeks, a month later, we go back and we renegotiate for seller financing. That's happened twice to us, and in the beginning they said no. Now, I've learned that, like, sometimes you gotta get into the contract and you gotta work and build trust over time in order to start to move the variables in your direction. But, like, yeah, I mean, that car wash, it would've been a great deal, but we went in, like, ridiculous, It's like, we're gonna put nothing down, no earnest money. It was like it was, I don't know
No,
what
we're
it was,
not
but
guaranteeing anything.
it was pretty ridiculous. Yeah, it
I
was
made an offer years ago on this duplex. It was like a no money down seller financing deal, and the sellers they liked it, but the broker came back and was like, "This would be absolutely crazy if they accepted this. They would write an article about this in the paper. It's so wild." I later found out because the seller was interested in seller financing, the agent ended up buying the property essentially with the terms that I had offered after
no.
they yes, after they made fun of me for making such a crazy offer. The agent realized, like, well, if they're willing to do that for this guy, they should do it for me. And he ended up buying the property. Now, I think there's some legality around that. I chose not to go after him. I thought it was, a little messed up and unethical. But it also illustrated that, like, he didn't think this was something the seller was interested in. But once it was Yep, but once it was presented, he took full advantage of the creativity that I came up with and bought the property himself.
Well, let's talk about this RV park, because I know if people were listening earlier, and then we'll wrap up. If people were listening earlier, they're like, "Well, whoa, 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 whoa! Why did it not make sense for Mitch and Travis, and why did it make sense for Gabe?" There's a very good case study to end, a real world case study to end the episode on. Mitch, why did we pass on that? I think we had bought another RV park that was using SBA financing, specific rates, specific down payments. Was it really more of a debt thing? Because why did we pass on that? Was it because we were nervous? We wanted more of a destination park. This was more of a pass through. Like, what made it not work for us, and what made it work for Gabe?
I think it was a good deal even when we were looking at it. What spooked us, or the reason we didn't buy it, was our context is, or our lens is through the lens of operating in a destination RV park. Our RV park in the Columbia Gorge is a destination. We understand that. We've been operating it. We understood how the levers there, how to dynamic price, all of those things. For us, we're looking at this location and saying, look, it's not necessarily a destination. It seems more like a stop. I think there's some people that go there for a destination, but it's not probably as strong as Hood River White Salmon. So I think my viewpoint on that, my perspective was like, we need to look at destinations. I feel more comfortable with that, but it doesn't mean it's not a good deal. It doesn't mean people don't go and stop there or stay there long term or whatever. I know that there was margin on that. We looked at it and it looked like a good deal. I think we were just more comfortable with the destination style versus a stop.
Yeah, that was a longer answer than I was expecting. I would have just said, I'm a better investor. That's why you passed and I purchased it. No, there's some truth to that. It's interesting. I think, I had just purchased my first 8 mobile home parks, and I was not looking at RV parks. In fact, a lot of mobile home park brokers were sending me RV parks, more transient traffic RV parks, not like full timers. And I wasn't interested in RV parks. And I looked at the numbers on this thing and I'm like, man, these numbers look good. Like, these numbers look better than, these 8 mobile home parks I just purchased, but it's in Burns, Oregon. Like, burnsrvpark.com. You can find my park there. Yeah, definitely not a definitely not a destination location. So I'm like, Burns, Oregon, who the hell goes to
It's
Burns,
got a
Oregon?
fancy name.
And yeah, right. And so, but I dug into the numbers and I was like, man, this park does well. But there's a couple things I liked. Definitely not a destination place, but it was a pass through. But it was a big pass through because
Huge pass through.
it's between Bend, Oregon and Boise, Idaho. And there's really not a lot of nice, decent parks between Bend and Boise. A couple other things we talk about lazy reposition, we talk about value add. I found out that the current owners only operated this park part of the year, and partly because, yeah, the weather, it gets snow in the winter and whatnot. But the previous owners would shut down 6 months out of the year, and they would go travel. They would go visit their adult children, throughout the country. They had no dynamic pricing. They actually had no online booking. Everything that they did was by the phone. It was very, very mom and pop, almost no advertising, no marketing, no online booking. So very labor intensive in that respect. And so I saw this as, for one, it didn't need to be a destination location as long as the traffic came. Although people do come to Burns, Oregon for things I have they're like, there's a huge bird
Bird
watching
watching, right?
festival. Yeah. Yeah, bird watching festival. And
It's the most boring thing on earth to watch
yeah, right, and
birds.
it fills up the park, and so it doesn't have to be something that I'm into, but there's enough people into it and enough people that go to this area. There's a lot of people that go there to hunt and fish. The sheriff in town was getting his house built, like, he stayed there while he was getting the house built. There's a lot of factors that really, turn this into a great purchase, and I think it's
But I also think you came in with a lower money down because you got some private money and relationships you had built up for years. And Mitch and I were looking at more traditional bank debt. And so that, coupled with the fact we didn't understand the sort of the pass-through nature of the park, was a no for us. But I think in hindsight, one of the things I look back on is like, oh, because we bought our park on SBA financing. It took 6 months to put that through. We almost got out of contract several times. Whereas you had the relationship with the lending, which made it also make more sense.
That's a great point. I bought this with essentially no money down, with private money, or it was a hard money loan. And I'm now in the process. Now that this park is optimized, it has a track record for a few years. I've been able to create about $1 million plus in equity, and I'm at the point I'm literally in the middle of refinancing this property into long-term fixed debt, right? And so it's,
I told
you
you,
know,
Mitch. I told you should have bought it. Damn it, Mitch.
it, it's all right. It's all right.
I don't think you did.
Yeah, it's your fault.
Here's the thing is, like, I love, and I'm not just saying this. I love that you're gonna make good money on it and have a lot of equity on it as well. I think it's awesome, and I don't think it's even a mistake on our end. I think that depending on where you are in the investing cycle, depending on how you look at things, depending on what your criteria are, you need to stick to that. And we've stuck to that, and we've gone out and bought awesome properties. It's worked for Gabe. It didn't work for us at the time, but it is a good lesson in how to make deals work. We didn't look at it from a seller financing or hard money perspective. We were looking traditional bank financing. So Gabe saw probably more value and upside than we saw, and he's been able to capture that. So that's awesome. Now we were able to go buy other things and focus in other areas and also do really well. So I look backwards and I'm like, at least it's like one of our best friends got to go buy it and go crush it. So to me, there's no loss.
It also goes back to what we started the show with. Deals are made, they're not found. There's a lot of opportunity to make deals. So don't just focus on finding deals. Go out there and make some deals.